Hey everyone, Ash here with the Better Than Yesterday blog. Are you self-employed and looking for tax tips to ensure that you're staying in compliance with IRS tax laws, all while avoiding overpaying in income taxes? Then you need to listen to these 6 tax tips for self-employed individuals. Let's start with keeping your nose clean with the IRS. Because, let's be honest, no one wants to go through an IRS audit. So, number 1, and most important on my list, is a clean and organized set of books. If you're a self-employed individual with a bookkeeping system consisting of a box, then please listen to the reasons why you need to put an end to that system today. Let's face it, if you're not organized and you expect your tax preparer to just figure it out, then you're risking overpaying in taxes because you can only imagine how many mistakes and mistransactions happen when you hand an unorganized box of business transactions to a tax preparer in the middle of their busiest time. As a business owner, you should be aware of how your business is doing, not just at the end of the year, but throughout the year. If you have a clean set of books, then you have the ability to work with your tax preparer on tax planning throughout the year. This is very beneficial because you can review where you're currently sitting at tax-wise to make business decisions to maximize your tax savings. I hope that all of you self-employed taxpayers are aware of the 1099 filing requirements because the penalty for not filing 1099s is pretty hefty. You may need to file 1099s if you hire any labor or vendor to provide a service for your business and if you pay them at least $600 throughout the year. As a business owner, the best practice for 1099s is to have all hired labor complete a Form W-9 prior to paying them. That way you guarantee that you have all the necessary information to file the 1099s at the end of the year. There are other 1099 forms that you may need to file as a business, but hired labor is the most common one. Please take time to review the 1099 cheat sheet linked below to be sure that you are filing all the necessary 1099s for your business. It amazes me how many self-employed taxpayers are not aware of quarterly estimates. Quarterly estimated tax payments are prepaid taxes. It's basically your self-employed way of withholding the appropriate tax dollars throughout the year to prevent underpayment penalties. So you are staying in compliance with the IRS by submitting payments throughout the year while saving yourself from overspending on unnecessary tax penalties. These payments are due for both federal and state on April 15th, June 15th, September 15th, and January 15th of the following year. Reach out to your tax preparer to see if you need to start sending in quarterly tax estimates. Just because you're self-employed doesn't mean you're excluded from retirement plans. There is a simplified employee pension plan that allows self-employed individuals to contribute to a traditional IRA. The contributions made to a SEP IRA is a deductible expense, so you get to use your SEP IRA contributions as a business deduction for the current tax year. The contributions must be paid by April 15th to use on your prior year tax return as a deduction. This is a great option for self-employed individuals. It is not only a business deduction, but a wonderful retirement plan. You can also offer this as a retirement plan for your employees. Keeping track of your mileage is a great business deduction. You can deduct any miles used for business purposes. If you take the mileage deduction, you cannot take actual vehicle expenses like fuel and repairs. Some years it may work better to use the mileage rate, and some years it may work better to take actual expenses. I recommend picking one and sticking with it to avoid throwing any red flags by changing it up every year. It's best to check with your tax preparer to see what option best suits you. With a qualified home office, you can expense some of your otherwise non-deductible bills. For instance, mortgage interest or rent, home insurance, utilities, etc. You may qualify for the home office deduction if either of these 2 things apply to you. You regularly use a portion of your home exclusively for business purposes, or if your home is your principal place of business. Hopefully these tax tips help set your business up to be better than it was yesterday.